In this video, I'm going to break down the 4 ways you make money investing in real estate and how these can add up together to make substantial income off of one property. So starting off, method number 1, cash flow. Cash flow is the income that comes in from the property. So like a rental property, for example, you're going to collect rental income, then you're going to pay out your expenses from that rental income. The income that's left after you pay your expenses, this is your net income. This is what we call cash flow, meaning that cash flows into your bank account and now it's your money that's in your bank account that you can do whatever you want with. So rental property income, again, start off figuring out how much a property can rent for. Estimate your expenses to pay the property taxes, the property insurance, if you have a mortgage payment, any utilities you're responsible for, and if you have annual repairs that you expect to make on the property, you can budget those in as well. And this gives you an idea of what the net income will be or what the cash flow will be. Income method number 2 from real estate investments is the equity you build in the property over time. So this applies to when you have like a mortgage, for example. Every month you're paying a mortgage payment, and that mortgage payment is made up of principal and interest. So you're paying back that loan balance to the bank that you borrowed. So over time, you're building equity in the property as you pay down that mortgage. So for example, if I had a 15-year mortgage, over 15 years I own the rental property, every single month I paid back that mortgage payment, and after 15 years, I now own the property free and clear as I no longer have a mortgage on it. We paid the mortgage off. So all that equity built up in the property over that time from paying down that mortgage balance. Method number 3 of how you make money owning real estate investment properties is appreciation. So appreciation just means the price goes up or appreciates. So as you buy into a property, let's just say in 2024, you buy a property, and by 2040, so 16 years later, in 2040, that property might be worth almost double what you paid for it back in 2024. So over time, that property value appreciated or went up in value. And that means that when you sell it in the future, you're going to be able to sell it for more than what you bought it for. So you're going to make extra money by the appreciation of the property. All right, and the 4th method for how you can make money investing in real estate are the tax savings. So when you run a real estate investing business, you get to take different business expenses. And as you take these business expenses off of the income you're bringing in the business, this lowers your net income. Your net income is ultimately what gets taxed. So the lower that net income is, the lower your tax bill is going to be that you owe to the government. Now, traditionally, if you don't own real estate investments, you go to your job, you work your job, you make a lot of money, and you get taxed on all that money that you're making. So the government sends you a bill and says, here's how much you owe based on how much you made this year. You got to pay this amount to the government in the form of taxes. But as a business owner, real estate investor, you can take all these different business write-offs known as tax deductions that the IRS legally gives you, and these deductions reduce your income down to a lower amount, and then you will multiply that by whatever tax bracket you fall in, and that will end up being your tax bill that you have to pay to the government. So again, taking all these expenses off your gross income will help produce a lower net income, and this will then reduce how much you pay in taxes. So you're saving money, not having to pay as much in taxes, thanks to all the write-offs you're allowed to take owning rental property. So owning rental property gives you access to tax write-offs that you normally don't have access to if you didn't own the property. So again, it's tax savings. You're saving money. You're paying less in taxes by owning the rental property. So you're saving money here, not having to pay so much into the government in the form of taxes. It sounds confusing, but it's legal if you follow the right steps when you do your real estate accounting. So talk to a certified accountant who understands the tax code and how you can benefit from owning real estate investment and how it can help save you money on your taxes. So overall, those are the 4 methods that you can make money in real estate investing. Number 1, cash flow, bringing income in from a property through renting it out, so rental property income. Step 2, gaining equity over time in the property from paying down the mortgage balance. Step 3, gaining appreciation in the property as the home values in your area go up over time due to inflation. And then step 4, saving money on your taxes, keeping more money in your pocket that you don't pay out to the government thanks to the different write-offs you get access to from running your real estate investing business.